Hi, this is Stephen here from Share Navigator, and this is just a quick update on our outstanding option and future trades. So first things first, let's talk about SPY. We have this remaining short put at the 620 strike. You can see the value of it is reduced now to $31. So we're well up in profit here. We're up $201 per contract. We want this to go to zero. So there's nothing to do here. We're just going to leave that expire worthless. It's 99.9% probable now that SPY will finish above 620 on October the 17th. So that trade, remember, was part of an overall combination trade, and that's going to yield a small profit for us. Then the second trade that we've done, we sold put options on the December crude oil futures contracts. And you can see we've done quite well in that. We're up $248 in that now at this moment in time. So if you remember, we sold a put option last week, and just remember with this particular contract here, the multiplier is 1,000. It's not 100. We took in 49 cents per share as such, multiply that by 1,000 and take the fees out. We took in $487 in premium. The value of that has dropped because crude oil has actually gone up. You can see the value is now down to 27 cents. So that works in our advantage when we're selling put options there. So we're up $248, and there's a remaining $240 of profit to make. So we're going to stick with that trade. We're not going to close out the trade at all. If crude oil starts to fall again and drops to the $55 level, we'll probably just take assignment to the December contract. So that will be the plan with that. And we also decided just to show you what it was like to buy the December contract outright. So the trade above it here is, on Friday, I think we bought this December crude oil contract. We're up $338. So this one is probably the more aggressive trade. It obviously wins when it goes our way, and we win bigger when it goes our way, whereas the short put is kind of at the 55 strike. That's more of a hedge. That's more of, okay, we want to allow some leeway for things to go wrong as well. So you can see I suppose the pros and cons of taking a least risky way. We're still making money, but just not making as much per contract. And then going outright and actually just buying the crude oil contracts. That's proven to be more profitable for now. My own view is that this was still the right trade to place, being more conservative, because the next level of support for crude oil, if 60 didn't hold, was $55. So I think this will always be the trade that I would go for personally myself, but everybody is different. And then we always do things just in one contract. Some people have done multiple contracts with this. So depending on the amount of contracts you've done will depend on the amount of profit you have. So right now, all those option trades and futures trades are going really well for us. We've nothing to do. We just stick with them, and we've no new option or futures trades planned for today. Okay, this is Stephen with an update on our crude oil and our SPY holdings in the options and futures market. Thanks and bye for now.